Alright, good morning everybody. It is early, and yes, I am tired. Looking at the market right now, and just took a position out here. Let me shut this off. As the market rallied, we came all the way down here in the overnight, significantly rollover. For those of any of you who were at the free training that we talked about yesterday, I showed you guys a position that I took late in the day trading, where I caught the market as it rolled over here. And I did miss this leg of the move. I was taken out before that, but it would have been in the overnight anyway. And then what happened was the market has consolidated here around an area that I was watching. Right, excuse me, right in here. And we had several attempts. There was an opportunity to make money here. You probably wouldn't. I wouldn't have made any money if I'd have tried to take those. But what ended up happening was right in here, we put in a nice double bottom. And as the market rallied, I went ahead and got involved in the trade. And I'm up about, it's not very much, but 7 to 10 pips right now, 7 pips right now. And the initial targets are right up here at around 69, so that's going to be about 19 pips of profit if we can get up there. And so about $190 or so, close to 200 bucks. And then the balance of the position, I'm going to hold to look for this level back up here. So there's a long distance to move with the secondary targets, and the real issue that you run into is I just don't want profits to turn into loss. We've broken structure here, so I can move my stops up just below the double bottom, because if the market pulls back, this is not something I'm going to want to be involved with anymore. And once we hit this target one, then I'll bring my stops to break even, and then we'll look for. We would expect at that point the market to rally higher, but up about $120 now, just short of that first target. And we'll get into this, start dropping some more of this out as we get closer. So sorry, I'm still a little tired this morning. I'll come back in a minute. And there you go, traders. Target one has been hit. Stops have now rolled to break even. We booked $200 there in basically about 10 minutes. And now we're retesting the highs. If you look at this on a 5-minute chart, this actually, all of this, actually, let me just show you what it looks like, because it looks much, much different on a 5-minute chart. And this is the difference. If you look at this on the 5-minute chart here, you can see that very, very clearly double bottom, lows were not violated. Then the market rallied off those lows back up into previous structure resistance. We took our initial profits off there. And then if this market has legs, if this is more than just a little consolidation before the market drops again, we'll see the market break out to the upside. And so all we got to do now is watch. But we booked a little bit of profit. Now we protected. Now we're secure. We're not going to lose any money on this trade. This is nothing but a winner. And so now all we have to do is just sit back and be patient. And guys, this is really the power, is not getting greedy with it. You're not shooting for the moon. You're not looking at this entire leg of the move here that it could move and not willing to take any profits off until you get there. You look for the structure, you look for the area, because you don't know at this point, when this rallies, is this just a channel? Is the market here just consolidating before it drops off a cliff again? Or is this a legitimate turning point in the market where we're going to see a rally? Well, if it's a legitimate turning point, then we should break these highs and head on to new structure highs. If it's not a legitimate turning point, then what should happen? We'll retest the highs here where we just did, and then the market will roll over. And so that's what I was watching, and just to give you guys a little bit of insight into what I was trading and what I was thinking. So now, next stop, I'm going to be looking up here around 142.19s or so, right around there. And actually, I'll have to take a look at this a little bit closer, but that may not be it either. I've got to take a look at where the structure comes in here. Anyway, I'll get back to you guys, and we'll see where this goes. And very quickly, everyone, market has rallied. Euro rallying here. We put in a little cycle bottom, and now the market has rallied again. I'll just fatten it up for you guys. You can see it a little bit better. The market has rallied again. We've broken through the previous highs, which means that we're likely not to look back. Um, and then what we should see is a continuation move to the upside. But if we do break below that cycle low, I've rolled my stops up. So and this is how, basically, guys, this is just how you trail them up. If you're going to follow the market up, you wait for the market to tell you where your stop needs to go. You don't get emotionally imbalanced about it. You don't get upset. You don't get frustrated. You just move your stops as the market gives you the opportunity. And so when the market puts in that cycle bottom, and again, this is after your initial targets have been hit, the market puts in that initial cycle bottom, giving you the opportunity to roll your stops, well, then you can go ahead and do that. And the great thing about this is that the way I've got this stuff set up on here, the great thing about it is that it gives me very clear signals about where the market's highs are coming in at. And it doesn't look, the 5-minute chart looks completely different than this, just simply because of the way the candles are printing. But you can clearly see, on all of this, the highs were not broken. There was a break of the high here, and that was the real issue. Break of the high here gets you out of the market, and then the market rolls over. So that was a false breakout to the upside. But in most cases, the market is going to tell you exactly when to move your stops, exactly where the structure lies that shouldn't be broken if the market intends to go higher. And so, and I've got a disclaimer here. We're up about 33 pips now. I said that I took off 200 pips of profit, or $200 in profit. It's actually about $100 because it was we hit 19 pips or so, and we took off half of our profits. So it's still early for me, guys. I'm sorry. It's 6:30 in the morning. I don't usually talk this early, and it was a long night last night. But anyway, what I'm getting to here, just to recap, is that as this stuff happens, you trail your stop. You let the market tell you, where does that cycle bottom come in at? Where should the market not come back below if we're going to stay in a bullish trend? And I don't know how long this thing will last, but I know where my next targets are going to be. I know where I'm going to take off the balance of my position. Right there, 42.17. If you're trading more, I'm not trading a lot. These are single lots. I'm not trading really heavy. But if you're trading more than that, if you're trading 2 lots or something like that, or even if you wanted to cut this in half and then trade 3 minis or 2 mini lots on the balance of the position, you can do that. I'm just going to go ahead and take my profits. If we hit that, it's going to be a nice morning for. I'm just sitting here doing other things, so it's nice to have that trade on and then just be sitting back and waiting for the market to tell you what it wants you to do. And right now, what it says is, I want to go higher, and so we're going to have to wait and see whether or not we can get any follow through on this. But initial profits are already off. We've got the balance of the position. That trail stops have moved. We're going to make an additional, 15 pips or so, 14 pips on the balance of the position. It's going to be a nice trade no matter what, so I'll be back. All right, and the market continuing to make higher highs. I want to go ahead and cover one thing for you, and that is, the trail stop, and when specifically you move that stop and how you move it and all those things. It's important that you understand why we do certain levels and not other levels and things like that. And I'm gonna go ahead and draw in here where my current line in the sand is, right there, and then I'm going to delete this so that you don't have to look at it. But as you can see, one more time, hang on, our entry, let me give us our entry so you guys can see that as well. There we go. Alright, so we got our entry down here, and currently our trail stop is here. Now, why is our trail stop right here at 41.71? Well, the market's continued to put in higher highs, and we had our stop below 641.69 right here. We had our stops below this level right there. I'm trying to figure out where to put my cursor so you guys can see what I'm doing. But we had them below here, but once those highs were violated, once we had a pullback here, and then a rally, we moved our stops to below 141.76, right about there. Now the question is, what about this little level right here? Because you see the market went boom, boom, and then shot off. So when you're looking at this, the market pulls back, rallies, bounces, and we got a little higher low here, right? And so in looking at our market structure, this will probably make it easier. Why don't we move our stops underneath this low? And why didn't the little calculation that we're doing here, why didn't it calculate that low as a potential low? Because in reality, that is a higher low than that low. The reason that we don't use this one is because this structure was never broken at 41.90. So if you think about it, when we do this, you have your line here, and then you have a high. And after that high is violated, we get a pullback, and your stops have to be below there. Then we get the pullback. Boom. Now what are we looking for? We're looking for these highs to be violated. Where does that happen? Well, it doesn't happen until right here. So this little pop here, this little pullback is not really part of our trend. It is noise. In fact, this entire little deal right here, if I go, I've got to learn my F keys here. If I look right here, this entire thing is really noise. It's just a sideways channel. Market pulled back. It's almost as if we didn't even have this here, and we just had a straight rally. This noise is not something that we even care about. And that's probably not a very good example. It's probably right here. This is the noise. Okay? So everything that happened after this pullback is just noise until we get that rally. So if you take this entire section out of it, this pullback doesn't even exist. And some of you guys may understand this, and it may be painfully apparent to you, and other guys may just be like, man, I still don't see it, I don't get it. And what I'm trying to get across to you is that unless you have a higher low followed by a new structure high or a higher high, I don't consider these levels as potential areas to roll my stop under. Because when the market pulls back, and here's the real deal, is that when the market pulls back, where's it going to pull back to? Well, it's going to pull back to this structure point at 41.76. That is the most likely place that the market is going to get held up if it gets held up. Now, we've had basically a straight rally north here. We've got news out in less than half an hour. So the market may stall here in advance of that news, and we may see a pullback as profit takers come in. Doesn't really matter to us because our stops are in place and we know where our targets are. So for me, as I watch this market, all I'm doing is just maintaining my patience. I'm being patient, and I'm waiting calmly. I have secured profits. We've already taken off the first half, and the second half sits right there. We're going to make about, at worst case scenario, a couple of $100 on this. And guys, all I'm doing is I'm on the Trading Underground. I'm posting some stuff. I'm reading some emails. I'm actually going through some stuff for a deal that I'm having later on, next month. And I'm putting some stuff together for that. I'm not even really watching this, and the great thing about it is I don't have to, because I have stops and I have targets in place. One of two things is going to happen. The market's either going to hit my profit target or it's going to hit my stop. Or it's going to give me a nice little solid cycle bottom that I can roll my stop again for. But I don't have to sit here and watch this thing tick, 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 tick. That'd drive me crazy. I would literally want to punch myself in the face more than I would want to sit and watch the market do that. So don't get into that habit. Place your stops, place your targets, then go do something else. Come back in a few minutes or in 10 minutes or whatever and see, hey, has the market put in a cycle top? Can I roll and protect my stops? You don't have to sit here in front of this thing second by second watching every single tick that happens in the market. You will go insane, and there's no reason for it. So we'll come back probably after the news event, because I imagine that's when we'll see either a pop or a stop out and cover the balance of this position. Thanks, guys. Well, and there it is, traders. I went to go talk to Todd about something for a minute, and I came back, and let me just orientate you what happened. There was that little pop that we were talking about before, and then we just skyrocketed. There was our secondary targets back here at 19. We easily hit those, and the market has continued to rally. I'm going to go ahead and cancel my protective stop because I don't have any open orders. Ended up making this morning about $420 or so on the two units that we traded, and a good trade. We'll see what happens here, where the market goes from here, but clearly a very nice rally out of this, and it did exactly what we thought it should, and it came right from this little tiny double bottom that we caught right here in the zone that we were watching. So just a fantastic trade. I'm glad I got to show it to you guys, and I'll have this out in no time. Thanks, guys.